Something big just happened in the global markets, and most people haven't noticed it yet. Right now, there's a war going on, and the market reaction has been strange. Gold and silver, which are supposed to be safe haven assets, are actually going down. Bitcoin is holding up way better than most people expected, and then somehow one post online and the whole market starts bouncing back again. So the real question is, if you're in your 20s watching this with all this confusion going on right now, what are you actually supposed to do to get ahead? So in this video, I want to break down 3 things. First, is the economy about to collapse? Second, is gold still a safe place to put your money, or has something changed? And third, what should we actually be doing if we want to get ahead as investors in our 20s? Because right now there's a lot of confusion, and if you don't understand it, you either panic or you're just going to miss the opportunity. And before we start this video, this is not financial advice. I'm just a guy who loves investing, business, and sim racing. So what is going on right now in the markets, and are we screwed? Because when you zoom out, nothing in the market right now is looking great. And to be totally honest with you, I'm now nervous. Reason being that because crude oil has shot up massively as a result of the war, it's had rippling effects across everywhere. As all businesses now have to deal with the cost of production going up, meaning when they produce stuff, it costs more money. And it's just had an effect across all indicators in the economy. The DXY, which is the USD versus other currencies, is up in a massive way. And that's because of the petrodollar. The petrodollar basically is this deal that was created by the US with Saudi Arabia where any oil is purchased, it's purchased in US dollars. So because oil's gone up in price, it means people have to use US dollars more, and it increases the strength of the US dollar. And it's basically made the chances of a rate cut go down. And what it means is that people are a bit more nervous as money's tightening up. All while this is also going on, and just some other indicators. The S&P 500 is well below its 200-day moving average, which usually shows signs that we're close to an economic downturn. I'm going to put up a photo of some historical evidence that shows when the S&P 500 is below its 200-day moving average, it's usually a bad sign. It's not guaranteed, but it's something which makes people pretty nervous. Also, other tech stocks like Nvidia and Microsoft are below their 200-day moving average as well, which is, on a technical level, not a good sign at all. As well as this, the Schiller PE ratio is still really high. So what that tells you is basically the price to earnings ratio of stocks in the S&P 500. And that tells you, in short, how overvalued or undervalued are stocks. When they're high, like they are right now, it just means they're overpriced. And when they're overpriced, that means they have the ability to easily move down. So this all sounds very technical, but to make it simple, all this uncertainty and everything going on right now has made everyone very cautious. And money right now is just flowing out and everyone's a bit cautious. So right now I'm watching this and I'm nervous. I give it a greater than 50% chance that we have an economic downturn just with the combination of everything happening right now. But historically, gold is usually the place to go to when things are going funny like this. When there is fear and huge amounts of money printing, this is when gold usually goes up. And that's why it's always been seen as the safest place to store your wealth. It's just stood the test of time. It's been around for thousands and thousands of years, and you know, guaranteed that it's got some form of safety. But recently, gold has actually been weak. It's been very volatile. It's moved around a lot this past week. And to me, that's a signal because it tells you that this isn't a normal environment. And what makes this even more interesting is that over the long term, gold has actually performed extremely well. Everyone seems to think, the S&P 500 is the place to go to. You drop all your money into there and it's guaranteed that you're going to be safe. But gold, over the last 20 years, has outperformed the S&P 500 in a massive way with everything going on. And the reason why I'm talking about gold right now, it's something which a lot of young investors don't focus on as much is because it's one of the clearest signals in the market. When gold, one of the most stable assets in the market, starts acting volatile, it means something is wrong. And it means there's a lot of fear and uncertainty. However, what it means as well is in the long run, gold always appears to be the winner. You see, when things go bad, it initially goes down as people sell everything. That's called a liquidity shock. That's where everyone pulls their money out. However, after the liquidity shock, after the dust settles, that's where you get a response. And I want to show you a table just showing you how gold has reacted in the past when downturns like the GFC happened, the COVID-19 market crash, the dot-com bubble. These were all things that happened in the past, and gold was able to recover from that. So the fact that it's acting volatile like this is a sign that we're in a pretty nervous area right now, and I'm just taking note of it. If you're in your 20s, here are the 3 things that actually matter the most right now, and what I'm doing myself just to prepare with everything that's happening right now. Not financial advice, but just something to consider. First one is you need to have cash, because in markets like this, cash isn't just safety, it's opportunity. Most people think they should always be fully invested no matter what, but that's exactly what leaves them stuck when opportunities show up. When markets drop, like they might drop now, they drop fast. And the people who win in these moments are the ones who already have cash ready and they can move it quickly. Because if we have a downturn, it means we can buy some nice assets, nice stocks on the cheap. What that means is you need to be doing a few things, and what I've been doing, it's build an emergency fund and have some cash available. Don't be overcommitted and don't go all in on investments, and just keep some money accessible and available, because if we do get a bigger move down, that's where some of the best long-term investments can happen, and that's where discounts come along. So I've built a 25% position in cash and I've exited some positions. I've definitely not panic sold, and that's something which I don't want anyone doing, because there's no guarantee in anything that we're going to have a collapse. However, I feel like it's likely that it could happen. I've also gone further and I've also started exiting some cash out of the banks completely, because historically when times like this happen, there can be some form of liquidity shock, and sometimes the banks can't be trusted to hold your money. So I'm holding the cash in physical form. I mean, I'm from Australia right now, and things have been getting ridiculously weird. I mean, we've had to go as far as stocking up on petrol because we've just copped it so much with price increases, and it's in times like this where you've just got to be prepared for the worst. The second one is you need to be careful with leverage, because right now the market is completely driven by headlines and not clear fundamentals. I mean, you get one post from Donald Trump right now and the market just responds. You've got war news moving oil overnight. You've got one post which just shifts everything, and AI hype which is pushing stocks higher regardless of what they're actually valued. So in that kind of environment, leverage doesn't amplify gains, it amplifies mistakes. And that is where a lot of people get wiped out, trying to chase short-term moves, shorting when they think the market's going down and longing when they think there's something good that's going to happen. But if you really zoom out, real wealth isn't built from one trade. It's built from compounding over years. It's something which I'm going to state a lot on this channel, and I'm going to go back to over and over again. This is a long-term race, guys. So don't try and pick winners or just focus on looking at certain moves. You want to be in this for the long run. So instead of trying to win fast, focus on just staying in the game and being patient right now for everything that's going on. The third one is stay positioned and don't panic, because this is where most people lose, not because they picked the wrong assets or they invested the wrong way, but it's because they couldn't hold them. They see a drop right now, like what could be happening. They assume it's over and they sell at the worst possible time. I've seen it myself, even with silver. People are quick to say it's finished. But if you're looking and thinking on a long-term level, the mindset just doesn't make sense, because The people who actually win are the ones who can sit through tough times like this. You look at the top investors like Warren Buffett, they go back to the same thing. It's patience that wins in investing. So instead of reacting to every move, just zoom out. Think in a 3, 5, or even 10-year horizon when you invest. Whenever you buy or whenever you invest, you shouldn't be thinking short term. You should be thinking long term. So, guys, we still have plenty of time. An economic downturn won't determine the rest of your life. At the end of the day, in a big picture, these are just numbers on a screen. We all have lives which we need to live. We've got families, we've got people that care about us. So step outside, go for a walk, just chill out with everything that's going on right now. Because at the end of the day, markets like this, it's just where people get tested. Not because it's complicated, but because it's uncertain. And most people don't lose because they were wrong. They lose because they reacted at the wrong time. So if you can stay calm, think long term, and stay consistent, you're already ahead of most people. And over time, that's what compounds. Thanks, guys. I hope you enjoyed this video. And also, if you enjoyed watching me try and survive Monza Turn 1, then leave a like for me. I'm trying out some new content with sim racing. And if this is a kind of style you like seeing, then please let me know. It'd be really good to hear that. And feel free, guys, please leave a comment below if you've got any questions. I'm more than happy to respond to you guys and just help you out with any kind of investing or ideas that you guys have. Hope you enjoyed this video, and I can't wait to see you in another.